Good morning, Colorado. You are listening to the Daily Sun Up. It's a conversation with the Colorado Sun. I'm team editor David Krause. Before we jump into today's conversation, here is a quick message from our sponsor.
Take a day to focus on your goals and learn from top thought leaders. The Ames Community College Spotlight Speaker Series returns September 16th with best-selling authors Dan Heath, Susan Cain, and change leadership expert Cassandra Worthy. All live at the Ames Welcome Center in Greeley. One day, 3 powerful perspectives. Set the summer trend. Electrify your lawn equipment and help reduce harmful ground-level ozone in your Front Range community. Learn more at simplestepsbetterair.org. Journalists at the Colorado Sun don't tell you how to vote, but we make sure you're informed when you do. Donate to keep independent news free for all Coloradans at coloradosun.com/primaries-2026.
Now, back to the show. Good Monday, everyone, and thanks for starting your week with us. This is David Krause, and today we're looking at a recent and unexpected bump in the stock price for Vail Resorts and why that might have happened. Joining me to get into the background and the company's response to the increase recently is Sun Outdoors reporter Jason Blevins. What's going on, Jason Blevins?
Grinding out stories, David Krause. Don't you know it?
I do know it. Let's talk about it. You have been covering Vail Resorts for decades now. JB, remind us, in the past, you've talked about Vail as a publicly traded company, so we get to see a bit more of their inner workings. But JB, remind us a bit more of the past and Vail Resorts' history on Wall Street.
Yeah, Vail Resorts went public in 1997 with an IPO. I think they were $22 a share back then. It was part of their purchase of the Ralston Resorts that included a Basin, Breckenridge, and Keystone. As we know, they were forced to sell a Basin as part of a Department of Justice antitrust investigation, some concerns over monopolistic pricing for Front Range skiers. And so we saw that company sort of establish itself on Wall Street back in 1997. And in the past 15 years, kind of since it really dropped that epic pass in 2008, it has grown from 5 resorts to 42 resorts in 4 countries, 3 continents, Australia, Europe, Canada, and obviously all over the United States. And that's sort of the background there. Largest resort operator in North America, and like we've said before, it's an interesting company because we can watch it. As a public company, we can sort of track growth and changes in the industry, unlike Alterra, unlike Powder, unlike some other resort companies that are private and hard to know. And, sort of interesting to watch that despite all the growth at Vail Resorts, their stock price has remained relatively flat for 10 years. There have been peaks where it surged for a little bit, but lately it's been languishing at a $130 a share right there, which is equivalent to where it was a decade ago.
Jason, recently, a big one-day bump. Tell our listeners about those numbers and why that might have happened.
Yeah, wake up on June 18th and all of a sudden there's, the stock is going crazy. There are 2+ million shares trading hands, and it's climbed, more than 10%. One of its busiest, best days on Wall Street ever. Dig a little bit, find out what's going on. There's a couple of articles that came out that day from financial journalists at Semaphore, and they had said that there was a major investor out of Asia, Oasis Capital Management, had acquired about 8% ownership stake in Vail Resorts, and they were maybe weighing a proxy fight to push out existing management, meaning they don't have people on the board, but they could go and vote through a proxy for a big shift over there. Another article said that Vail Resorts had hired these lawyers, special bankers, to specialize in defending itself from a possible takeover. This is something that we wrote about a few weeks ago when I chatted with Utah billionaire Matthew Prince, and he was saying Vail Resorts should sell him Park City Mountain Resort. And and the argument there is that the company would be better off selling its resorts and running the Epic Pass as a franchise operation. And Matthew Prince has been saying that if the company doesn't sell him Park City Mountain Resort, there will be a hostile takeover of the company. There's activist investors out there who are willing to turn the company upside down, shake it out for parts. So the Gordon Gekko scenario of Wall Street, that movie, where the value of the company, Vail Resorts, is valued around $5 billion, and the value of its assets, 42 different ski areas, is significantly more. And that makes it a prime target for a hostile takeover.
Jason, talk about the numbers then. As of closing Friday, it was down to $137 a share roughly. But talk about that one day surge. You mentioned 2 million shares trading hands.
Yeah, it's quite a big day. Some of the Wall Street sort of watchers were calling it one of the best days in 6-7 years for the company. And that it's an interesting sort of scenario. It's just that sort of frothiness in this stock that comes out with these sort of public reports and these news reports, and it makes it kind of an interesting process to watch. But Vail Resorts is a publicly traded company. They don't really say a lot. They don't speak outside of quarterly investment reports with investors, and even then that's very controlled environment. So, this was an unusual scenario following, it had been a couple weeks since Vail had posted some lackluster third quarter earnings, and sort of warned investors that season pass sales were slowing. So there wasn't a particular news hook from the company to drive this sort of spike. So you had to look at the, recent reports of the hostile takeover, as well as Matthew Prince is kind of pushing on the company. So you had sort of an interesting external forces on the company right now.
So it goes from basically $129 a share to $144 a share in one day. A couple of days later, then Rob Katz, the boss at Vail Resorts, kind of responded, to your point, a little bit out of character because he usually only talks on quarterly meetings. He went on Vail's podcast and kind of talked about the situation, give us his take, and him going on the defensive, as it were.
Yeah, he has a podcast called Epic by Nature. It's really interesting. It's sort of a opportunity for employees to kind of hear directly from the top on maybe the direction the company's heading. And at the podcast he dropped last week, it was really looking at the value of the 42 resort network that he has. And he spoke at length on why that's important. One of his main things is that when you have 42 resorts, you're able to really professionalize a lot of career paths, and workers can, really climb a ladder. And the next thing you know, you're going from a lift operator all the way over to, from lift operator all the way over to, lift supervisor, moving to a different resort, moving around all sorts of different, companies and resort network, and really professionalizing and sort of creating a whole internal career growth path. That's one of the values of a 42 resort versus independently owned resorts where that opportunity maybe is not there.
Jason, I thought it was interesting. One of his comments about the possible selling off, especially the Park City Mountain Resort, his comment was something to the lines of, it's always been a silly conversation on every front. Is that him just trying to really quell this conversation, or is that the company kind of taking a little bit of offense to people coming out of the woodwork and saying we need a change at the top?
It is in response to what he called, some rather loud voices out there, and for sure that has sort of spurred this podcast. And he talked a little bit about how he was debating whether or not even to, sort of address it so publicly, because it's sort of a distraction for his company. Those guys are focused on selling passes and the guest experience and improving their mountains and the ski experience. So there's a lot of there's a lot of different reasons he might have gone in there and had this podcast, but it was very illuminating. I thought it was really interesting. And like you said, a rare sort of out of the 4 quarterly report sort of in opportunities sort of hear from Rob. And I think that what we saw mostly out of that was that one, Park City Mountain Resort is not for sale, and the company will never ponder selling it. And that's sort of the company line there. But Matthew Prince is of the notion that if they don't want to sell it, they could be forced to sell it with this sort of a proxy vote and a push of for new management to turn it upside down. It's a decades old Wall Street strategy. When you see a company that their market capitalization is worth less than the value of their assets, that is a takeover company. That's sort of, there's lots of people out there, and it is an old school sort of mentality. And, it doesn't care about skiing, that sort of Wall Street mentality. Doesn't care about anything. It cares about the value of a bunch of parts versus a whole. And when the parts are worth more than the whole, that's sort of the, premise of a hostile takeover. So I think Rob spoke at length on, the value of the company and careers and, skiing and growing skiing and all the different things that his company has done with the Epic Pass and really transformed the industry. He acknowledges that doesn't necessarily matter to a hostile takeover bidder. But at the same time, Gordon Gekko doesn't much care about skiing. That's not what he's in it for, right?
JB, what else did you take from that podcast conversation? Anything related to the pass structure?
Yeah, Vail Resorts pioneered that Epic Pass, dropped it in 2008, and now Terra Mountain Company with its Icon Pass, and now a bunch of smaller resorts are out there. And, he spoke at length on how the partner model, which is Alterra Mountain Company's approach, they only own 17 resorts, but they have partnerships with, 60 plus other resorts. And that can be challenging, Rob was saying, because it making adjustments to season pass prices when you're locked into a long-term deal with a partner, or deciding you want to lower lift ticket prices dynamically in the middle of the season to accommodate, shifting demand and things like that. That's something you maybe can't really do with partner resorts. And, and that's something that Vail Resorts is trying to do kind of. But one of the more interesting things I heard Rob say was that it's time for this industry to admit that the passes are reaching a maturity point. We wrote a couple weeks ago about how they're looking at their third quarter report. Pass sales were slowing down. And that's after, many years, more than a dozen years of extraordinary annual growth. They were seeing double-digit percentage growth of their pass sales every year for several years, and that is starting to slow down. So that has implications in this industry that will have a long tail. We need to sort of absorb that, and if that is true, we are seeing less visitation on passes. We are seeing slowing sales. So what is the next step of growth for these companies and for this industry if it's not going to be this, $1 billion worth of season passes every summer? So I think, that was one of the more interesting takeaways that I heard him say, is that we need to admit this, and the industry needs to admit this. Passes are reaching a maturity point, and that is that's an interesting point, and it's really going to change the future of growth. And if the company wants to see that stock price rise, it's going to have to show some growth. And where's that growth going to come from if it's not coming from, sort of explosive annual growth of season passes?
JB, always a pleasure to catch up with you and get your insight on these ski industry related stories as well as the outdoors. If you haven't already, you can check out Jason's latest story about Vail Resorts and all of his outdoors coverage on our homepage and on our free Colorado Sun app. Jason Blevins, my friend, make it a great holiday week.
Do the same, DK.
Thanks for listening. And finally, here are a few stories that you should know about today.
Leaders at the Colorado Public Employees Retirement Association, or PARA, are reviewing their incentive policies. This comes in the wake of a Colorado Sun story looking at millions of dollars in bonuses paid during down investment years. Its executive director also acknowledged for the first time that PARA is an outlier in pay to its investment team. The town of Fraser is finding its identity as a Colorado high country community, and a big push is adding to its art scene. The town has donated a large piece of prime property to create an arts center and now supporters have collected $4 million toward the effort. As Colorado celebrates 150 years of statehood, folks in southern Colorado are honoring the art of adobe. It is a practical, abundant, and environmentally friendly building material, but also a compression of the conditions and chants that shaped Colorado over hundreds of years. In this week's Colorado Sunday feature, we explore the metaphor that is adobe.
To read these stories and much more, visit our website, coloradosun.com. As an award-winning nonprofit news outlet, we take our mission of credible, independent journalism seriously, and you can check out our trust indicators at coloradosun.com/ethics. Our music is by the Denver-based Matt Skellinger Group. A link to their music is in our show notes, and a special thanks to Swallow Hill Music. I'm David Krause. See you next time.